Welcome everyone to Vested Interest. This is Shane back for another stock pick of the day video. Quickly wrapping up another month, already at the end of August. This year has really flown by, at least for me. Maybe it hasn't for you. But we are going to take a look at Atkore. This is one out of the industrial sector. They supply or are a supplier of electrical equipment. Before we get too far in the video, if you could do me a huge favor, it doesn't cost you anything but a couple of seconds of your time. Hit that thumbs up button down below if you find any value in this content. If you are a dividend growth investor, make sure you are subscribed to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Make sure you click that notification bell so you're notified whenever we put out any new content. We do the Stock Pick of the Day series videos Monday through Thursday, taking a look at a company that stock is pulled back on the day to see if it is presenting any value. We also do subscriber suggestions. So if you have a company like Atkore you'd like me to cover in the series, go ahead and drop it down below and I'll work it into the rotation. I really do appreciate everyone who's taken the time to do that. Special thank you to the subscribers out there. The channel continues to grow because of people like you, and the channel only grows because of people like you. Now, this is the Vested Interest Stock Screener. This is how I look at companies on a very high level to see if I'm interested in adding them to my watch list and then doing more of a deep dive into the financials. It's also how I look at a company that is already in my portfolio as a back check to make sure it still meets the initial screener. And if it doesn't, then I probably need to look at the financials and see what's going on with the company and make sure that nothing has changed with the fundamentals. And third, it is how I set up the video. So we are going to run through the screener. We'll take a look at how it stacks up at the end and see if it meets 5 of 8. We will not use price to book. I use price to book on financial companies like banks and insurance companies. You can use price to book, but for companies outside the financial sector, don't use one as fair value. Make sure you are comparing them to other companies in the same sector, in the same market. So for this company, for example, it's a industrial company in the electrical manufacturer and sales business. They're a supplier of electrical equipment. So you'd want to compare them to other companies that also are in the industrial sector that would manufacture electrical equipment, right? Same thing with any other company, technology, compare it to other technology companies that would be similar, so on and so forth. You can tweak this as well. I know some of you out there who watch the videos may not just be dividend growth investors, so just tweak it to your liking. Maybe there's some other, maybe you want to look at revenue as an initial screener. Maybe you want to look at margins. You know, you can take out the specifics for dividend growth investing, like check valuation based on dividend yield theory or dividend payout ratio of 75% or less, or any of the other ones that don't apply, and tweak it to meet your screening needs. That is the idea behind this channel as well. That's why I call it vested interest. It's in your vested interest to create your own screeners. Make sure you are doing your own investing into your own timelines, right? We're all at different ages, so you might be 10 years out, 20 years, or 30 years out, 40 years maybe even from retirement. So you'd want to adjust based on what you're looking for. All right, let's get off that soapbox. Back to Atkore. Check them out at their homepage, www.atkore.com. That's www.atkore.com. That is their homepage where I pulled this information from. About Atkore. Atkore is a global manufacturer with facilities located around the world, recognized as a leader in electrical safety and infrastructure solutions. Our products are used to power and protect the world, including electrical conduit fittings, cable and cable management systems, infrastructure products, and safety and security products. Distributors and contractors globally recognize Atkore as an industry leader and preferred supplier. We have a vast portfolio of products that will meet all your construction and renovation needs. Because selecting the right products is sometimes a challenge, we are here to advise you. We also know about how pressing deadlines can be. Through our large network of regional service centers, we deliver orders on time with a century of expertise. Look to Atkore for the following markets: non-residential, electrical power, data centers and telecom, water, transportation, and solar. I actually pulled those down. If you were to go to their homepage, you'd be able to click on those markets and then click on each one of these, right? Commercial and industrial, electrical. That's what non-residential is: commercial and industrial, electrical power and utility, data center. So same thing over here, but you would be able to click on each one of these and see some of the companies I think in those markets if you go to their homepage. Again, they are worldwide, not only in the United States, but then you can find them in the UK, Europe, China, Australia, and New Zealand. If you were to go to their homepage as well and lived in one of those countries, maybe doing a construction project, you'd be able to contact them. Their contact information is there. I did not list it on this video. So again, check them out, www.atkore.com. That is their homepage where I pulled this information from. They are out of the industrial sector, a mainly electrical and other supplier around the construction industry primarily, but also transportation as well. Now, the reason we are taking a look at them down 4.18% on the day, big drop on the day. We are talking about Atkore Inc, ticker ATKR, out of the industrial sector, closed out the day at $95.97, $95.97. 52-week range as low as $91.31, as high as $194.98. They are right close to their 52-week low, within 15% of a 52-week low, as a matter of fact. Actually within about 9% or a little under that of their 52-week low. Market cap of $3.442 billion, so a small cap company here. Beta of 2.15, very volatile, right? You may be able to use that volatility to your advantage. The market typically, a beta, that's what beta means, the volatility in the market. One being the market. So this is twice, more than twice, as volatile as the overall market. But again, when you see companies with this great volatility, you may be able to use it to your advantage. They are close to a 52-week low, but they could head right back up to a 52-week high, or they could continue to go down and set a new 52-week low. You want to try to be buying these ones, not at the 52-week high, but taking advantage of that volatility and try to get them at their low points. Again, you can't ever time the market, but sometimes you can do a little bit of timing around stocks based on their volatility. This is much higher than the overall market. PE ratio, price to earnings, $6.73 per share. EPS, earnings per share, $14.26 per share. This is one of those rare times we see earnings per share higher than the PE ratio, and that is a very low PE ratio. Leads me to believe that this one may be undervalued. Earnings date, November 15th through November 19th. Tune in back there if you want to see what's going on with this company as far as earnings. Report goes for dividend $1.28 per share. They are a quarterly payer, I believe, not with a long track record of paying out dividends, but I believe they are a quarterly payer and pay out a dividend yield of 1.28%, which is a little low, but I just picked up Google in my portfolio, which is even lower than that. So take it with a grain of salt as far as that goes. Ex-dividend date, August 20th. So we are past that. Looks like they're going to pay out on the 30th. So if you were to buy them now, you would not be in line for that August 30th payout. You'd have to wait for the following one, several months from now. Now we're going to jump over to look at dividend yield theory. To do that, typically you look at the 5-year dividend yield average. Unfortunately, they don't have one, so we're not going to go to do it and compare it to their current 1.28%. If you were to use trailing dividend yield 0.64%, it would speak to potential overvaluation, but we don't have quite the 5-year average, so we're not going to give them a check there, even though, again, if you looked at the trailing annual dividend yield of 0.64%, it's almost twice as high as that, so it does seem to be undervalued as compared to where they may have started that dividend yield. And again, they don't have a long history of that. You'll see that here in a little bit. Payout ratio, extremely low, 4.49%, so they have a lot of room to continue to increase this dividend over time, as well as to continue to pay down debt, make acquisitions, repurchase shares, reinvest back into the company, pay you as a shareholder, maybe even buy back some shares, which is what I like to see, and it looks like they are doing that. So let's talk about that. Let's jump down to free cash flow growth. We like growing free cash flow. Typically, if a company has growing free cash flow, they grow their dividends along with it. 2020, you can see here they had $214 million. 2021, jump up to $508 million. 2022, bigger jump up to $651 million. Looks like a bit of a drop in 2023. And if you look at the repurchase of shares, it does look like it was a bit of a drop in 2023 because they not only decreased their free cash flow, but they also decreased the repurchase of shares from 2022. But going back to 2020, you can see here a repurchase of 17 million shares, 2021, 135 million, 2022, 524 million. And then again, along with the reduction in free cash flow, they did reduce the repurchase of shares in 2023 to 505 million. Overall, up from 2023, 3 years ago in 2020, or 4 years ago in 2020, but a bit of a decrease there in 2023. So we won't give them a check there, though that's not much. And I wouldn't let that be a deterrent for this one. I'll just say at that. Now we're going to jump over to stockanalysis.com. The previous information was brought to you by Yahoo Finance. I am not affiliated with either site. I just like to go to multiple sites to make sure the information I am getting is accurate and up to date. And I recommend you go to multiple sites as well, 2 if not 3, but definitely more than 1. site to make sure the information, again, is accurate and up to date. Now, they do have 4 analysts from stockanalysis.com that have taken a look at this. They call it a consensus buy. They have a low estimate of $100, which would be 4.2% decrease from where, or increase from where it currently sits. So it is currently 4.2% lower than their lowest estimate. Average estimate of $137 would be a 42.75% increase from where it currently sits, and a high estimate of $188 would be a 95.89% increase, and I don't believe that would even be back to their 52-week high. So this one right up against its 52-week low, significantly off its 52-week high, with all analysts, even though it's only 4, saying that it's currently below their lowest estimate. I mean, might be one that's undervalued currently. Return on equity and return on invested capital, I like to take a look at this. You find them under the statistics tab. I like to look at this and see how well the company is reinvesting its capital back into itself. I like 10% or better for these metrics. Return on equity, 36.49%. Smoking high. Return on invested capital, 18.75%. Again, I like 10% or better, so that's almost twice what I'm looking for. Unfortunately, they did not have anything listed for EPS growth. I like 5% or better projected over the next 5 years. Nothing listed for revenue growth either. I like positive revenue, though it's not one of the metrics that I use for an initial screener. It is one when I go deeper into the financials. I'm looking at revenue to see if it is growing over time. I'm also looking to see if margins are expanding over time. They have more equity than debt. They're paying down their debt. They have more assets over liabilities, with the ability to pay off their assets, over the next 3 to 5 years, preferably. Now let's look at dividend history on this one. Not a lot of history, as you can see. They just recently started paying dividends in 2024 here. They are a quarterly payer, they say. Does look like they are going to pay out on the March, May, August, December timeframe. Payout ratio, they say 8.99%. Yahoo Finance earlier said 4.99%. Either way, under 10%. Very low payout ratio here. Dividend growth none listed because they don't even have a year in yet, so obviously they haven't raised it yet. But their buyback yield, 6.8%, very good. When they are buying back shares, they are doing it very efficiently. And shareholder yield at 8.12%. Very interesting company here. Looks like one that might be kind of a growth company, potential growth company that pays a small dividend. Or maybe it's a company, that's what it looks like. Looks like a small cap company that is looking to grow fast with a low payout ratio that may aggressively raise its dividend over time. So I'd watch this one. Let's see. Well, let's go over and see where it stacks up. As you can see, been paying 32 cents since February, but their payouts March, May, August, December. So let's jump over to the screener and wrap this one up. Understand the business. That's where we start. Check free cash flow, or growing free cash flow. They had the one down year in 2023. Growing dividend, we don't know yet. Dividend payout ratio, yeah, way under 75%. Check there. We don't have enough time to look at dividend yield theory, so no check there. It is within 15% of a 52-week low. Check there. Return on invested capital, very nice. Check there for both. Earnings per share growth, they didn't have anything listed. They only have 1, 2, 3, 4 checks, but I'm going to be honest with you. This is one I'm throwing on my watch list because if they had 5 years of history, I think they'd be undervalued based on dividend yield theory. And growing dividend, this being their first year, I'm going to anticipate that they are going to grow the dividend. So I am actually throwing this on my watch list. It looks attractive right now. It's one that I just ran across here recently. I want to do more of a deep dive into the financials, but it is an interesting company. I like the sector that it's in. I like the niche that it is in as well, especially with some of the most recent political capital that they did some legislation on is into infrastructure, and part of that infrastructure is adding broadband services. So they are going to have a lot of cable, which this company deals in, as well as electrical relays and that sort of thing, which I believe this company deals in. So they may benefit from some of the infrastructure funding that's going to go on in America over the next couple of years, even though they are an international company. So that keeps them diversified enough as well. Interesting company, in my opinion. Let me know what you think down in the comment section below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So again, if you have a suggestion you'd like me to cover in the Stock Pick of the Day series here, go ahead and drop it in the comment section below. And make sure that notification bell is clicked so that you don't miss out on that video. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for tuning in. Thanks for stopping by, and we will see you in the next one. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.